All right. So I got a hot take for us today.
Okay.
So I want to make this a short one. This is just a teaser for our audience. The topic is, who really is private equity and why should construction companies care? And I want to start by saying these are real people. Private equity is just people. It's just people with money who are looking to invest. And they want to invest in things that generate a nice return. And construction has been an area of interest for private equity for about, the last 5 to 7 years, probably?
Less than 10, yeah.
Yeah. So, Greg, you have a private equity background in your early career after college. You went and worked for a family office, and you were in the real estate side of private equity, as I understand, right?
And development and construction and real estate investments, yeah.
And that kind of led you into the construction industry afterwards.
It did.
So we work with a fair number of companies that have private equity ownership or management. Would that be the right way to say that? Or they invested in these companies, or they purchased these companies?
They invest in, they identify, invest in, and then take some version of a management role. Whether they get a board seat, whether they are in the day-to-day, whether they place someone in the office of the company they bought, but they have a say in what's happening in the business.
Right. And sometimes the original owner or the owner of the company exits as part of this acquisition by private equity. Sometimes they stay on for a few years as part of maybe an earn-out.
3 years is kind of a standard thing. You stick around, you get all your experience in, and then either you cash out or you stay because you could still be part owner of the business. You're just not running the day-to-day.
We've seen some younger owners that have sold to private equity to get an influx of cash so they can grow the business, and they don't want to leave.
Right.
So they're willing to sell a majority share 49%
of the business. 51%, whatever it ends up being.
Right.
Yeah.
So the question I just wanted to answer for some of our audience, because I get this a lot, is who are these people in private equity and why are they so interested in construction? So maybe you could kind of shed a little light for our viewers, our listeners, like, how do people get into private equity? What does that really mean?
So there's two parts of private equity, and this is basic across all the private equity sector. In fact, all the private sector, right? Whether it's private credit on the banking side or whether it's private investment or private equity on the kind of this size. And we call this the mid-market. So the mid-market is usually 10 million to 100 million. That's the size of the investment. There are larger investments that you can buy into. So in the mid-market space, there are two sides of private equity. There's the general side. So there are the people who are giving the money. There's the investor side of things, right? It's your money and you're putting it into someone else's private equity fund. And then there's the management side of private equity. The people who take the money from the investor, put it into their own private equity entity, and then go use that money and deploy it to buy things. Mm-hmm. So one is an investor and one is sort of an investor manager.
Got it.
The reason people get into it from the investor side is because they are looking to diversify their portfolio, really. They're looking to say, we'll throw a number out, $20 million. I don't know. I've got $20 million and I'm wanting to put it into something that's not the market, that's not, stocks and bonds. I want to go into the private space. I want to give you money because you're a reputable private equity firm. And then that private equity company takes that $20 million and puts it together with other investors and raises a fund. If you've ever heard that phrase, raising a fund, Fund A, Fund B, Fund 9, whatever. And they put those $20 million together and they raise a fund for $400 million. And that $400 million is in the pot of money that they take to go then buy things.
So this is similar in my mind to like a mutual fund. It's similar mechanism, right? There's people pooling their money, and then there's a fund manager who's now buying different shares of stocks and bonds to create a portfolio for that fund.
Yes.
And then they're in charge of rebalancing that fund, similar to like a managing member, a managing partner would be overseeing these acquisitions.
Right. The investment side doesn't necessarily have a say in the investment. You give your money to someone else, in essence, and then they go make the decision. What are they going to be buying? Right, basically. Just like a fund manager. Mm-hmm. You're the investor. You buy a mutual fund. You don't necessarily control what's bought, and you don't necessarily go look at the proxies to see what you're going to vote on. You just own the company now. But on the investment side, or the people taking the investment, those are the people who are saying, okay, we're raising $500 million for Fund A. and we want to buy construction companies. That's really why they do that. It's a strategy. You could do anything. We've been to a few PE conferences here at Ascent. There's focus on everything. There's focus on technology. There's focus on medical. There's focus on infrastructure, healthcare. It doesn't matter.
Yep.
There is a focus in the mid-market on construction companies.
And so when people in the construction industry are talking about private equity is buying up, that's really not talking about the investors who are the money people. They're the lenders. It's the middle person that is controlling the fund and which companies, what types of companies they are buying.
That's
so they're investors that are looking to have a return that's better than the market is yielding. And they're investing in businesses that way.
Right. And if you take the market, the standard market number that people always use is 8%. Right. The standard S&P, the standard Dow, over time, if you leave your money in long enough, you'll make 8%. Hopefully you make more than that, but 8% is an average. So what they're looking to do is get into the private space, which is how do we buy a private business run by a private family or private person, and make more than 8%. Because otherwise I would put my $20 million, my $400 million into the market and I'd
put it
fine.
in an S&P index fund.
And just leave it alone. So what they're hoping for is to take a privately run construction company that maybe does plumbing, right? A family-owned plumbing company or a conglomerate of plumbing companies who focuses on a whole region. They own the Northeast Corridor. They own the Pacific Northwest. Their trucks are everywhere. They're branded. Everyone knows what that company does. And so therefore, we're going to go and we're going to buy them. We're going to give them some money and we're going to help them get better at what they do. We're going to help them scale. And when we are ready to exit, right? It's called an exit. When we exit, you get your money back plus the value plus the profit that you would have made. So if you put $20 million in, you hope to get $25 million back. That's optimistic, but that's the model.
Got it.
And so that's why people buy construction companies because what private equity saw was there is a tangible aspect to construction. We can look on paper in black and white and say this company is worth this today. They have revenue of X. We want them to get revenue of Y. Their gross margins are this. We want their gross margins to be higher. And when we sell this investment 5 years from now, we want to get more money than we paid for it. Because you can see tangible things happening, right? We build things. We move things. Things are real in the construction space.
And one of the things I hear a lot is that private equity really loves recurring revenue. So they're like HVAC companies because they get annual contracts with homeowners, or they have maintenance contracts with big facilities managers, things like that.
Service companies are a big part of the construction subsector of construction. Yeah.
Right. And a lot of companies have a construction side and a service side. So they are also appealing to private equity investors because they have that recurring revenue, which gives them a stable cash flow.
It does. And it also lets them look ahead to when they are going to exit, which is what it's called in the private equity space, in order to sell. If you think about what the stock market is, anyone can buy anything and anyone can sell anything. You can go on your computer and you can hit buy and you can hit sell. You can't do that in the private space. In this private equity space or the private credit space, you can't necessarily just go to your computer and sell a construction company that your fund has bought. You have to find a way to exit. You have to sell to someone else. You have to find another private equity buyer to buy. So there's a lot more involved in how you get your money back. But
it's a longer term investment.
It's a longer term investment, but the recurring revenue part is important because in the meantime, you can see money coming in.
Right. Got it. Well, I think that's great. That kind of gives our a little more background about what do the people mean when they say private equity? Who are these people? Why do the people sometimes say private equity is ruining the industry, or why is it making the industry great and it's making a lot of millionaires out of people? So.
It's definitely something that's been going on, and we've seen it here for the last couple of years. And whether it continues at this pace or not, I think is to be determined. But the private equity space is not going anywhere. Its focus on construction may ebb and flow.
Right.
But it depends on the industry. But I think right now it is still safe to say that people in private equity are looking to construction as a positive investment because it's a tangible good that can be sold.
And it's a booming industry still. The economy is strong. The industry outlook is good. The backlog is good. So a lot of opportunity there.
Absolutely.
All right. Thanks for the thanks for the hot take. This was great. Appreciate it. Everybody check us out. YouTube, Spotify, Apple Podcasts. Like and subscribe. We'll see you on the next one. Thanks.